Hey folks, Dan Frio here, the rate update. Today is August 20th, 2021, TGI Friday. There was really no economic news on the forefront of everything, but if you really dig in, there's some news today from one of the Federal Reserve members that's kind of tanking the market. So don't go away. We're going to talk about that and a little bit more next. Okay, so based on the economic calendar that we normally follow, and I brought it up yesterday, there's really no economic news today that should spook the market. There's things in the background that I focus on, but I usually don't kind of micro in all the details that I know that are coming to all you guys, because most of the time it's irrelevant. But today, one of the FOMC members, Federal Reserve members, was speaking. And listen to what he said. It's a lot of things that I've been discussing.
You on the current rise in inflation, do you believe it's transitory? I mean, you talked about that a little bit. And then in terms of what the Federal Reserve is doing to respond to inflation, how long will that continue? So what's your definition of substantial progress, and are we making substantial progress?
Well, let's take these things in order. First, let's start with inflation. As I mentioned in my earlier comments, again, we think some of these extreme moves are going to moderate. You may see some even tailing off. We're already seeing commodity prices, so that's part one. But we're also seeing in all of our work with context, a broadening of price pressures. So again, our forecast, as I said, for next year is 2.5%. What label do you put on that? I don't know. I wouldn't call it transitory. I wouldn't put a label on it. And I've been very careful publicly to say, I don't want to label it. I just want to try to understand it. And we don't understand it yet. But I can tell you price pressures are broadening and the confidence of businesses in raising prices is increasing. Okay. So that's part number one. Part number two is the Fed's mandate. It is accurate to say that we agreed to a framework last year, and I support that framework, where we said we're going to be less preemptive than we've been in the past in raising interest rates, removing accommodation, and we're going to be less anticipatory of inflation, okay? With the hope that we can get more people into the job market. Having said that, we still have a dual mandate, and there's nothing in the framework that is inconsistent with a commitment to anchoring inflation in this country at 2%. We're willing to see inflation run moderately above for some period of time, but we expect to average 2% over time and anchor inflation at 2%. So I take that dual mandate very seriously. And what I hear from communities all through this state and in the country is low, moderate income communities reminding me regularly, especially these days, inclusive prosperity means jobs and price stability. And I'm hearing from a lot of low, moderate income communities, listen, we spend a bigger share of wallet on gasoline, cars, rents. You know, the historic rise in housing prices mean rents are increasing. And many of these communities are expressing concern about being able to make ends meet, even though they're employed. And this is why many of them feel like I got to get a higher wage job or switch jobs because these price pressures. So I take all that into account in my job. And so this is why you're probably getting to the last point, substantial further progress. We have a couple of tools, several tools, but two of them that are the people focus on the most. We are purchasing right now 80 billion of treasuries and 40 billion of mortgage-backed securities every month. The Fed funds rate we've kept at 0 to 25 basis points. I have been explicit publicly many times in saying I divorce in my thinking those two issues right now. We have a whole range of considerations on the Fed funds rate, and we'll make those decisions not even this year in 2022 and the months to come. And I don't make those decisions a year in advance. We do have an issue where on the purchases. And I would have told you in 2020 and 2021, early 21, I thought they were very critical, very important, along with our other tools, 13.3 programs, other things. We're now at the stage, though, where I said this is different than the aftermath of the Great Recession. That was a demand challenge. We have substantial demand. I'll come back to that. We have primarily supply issues. These purchases are not very effective. They're very effective at stimulating demand, but we don't have a demand issue. And so I've been one who's been saying, first, I want us to be debating the purchases, talking about it. And then I've said I want to move sooner. I'd like to move soon. And then I've also said in public appearances recently, if the economy unfolds as I expect, I'd be thinking about the possibility of announcing something in September and starting in October. The big caveat on all that is if the economy progresses as I expect, and that's where the Delta variant is just an unknown that I've got to be agile, open-minded, avoid being rigid about. If I saw that the Delta variant was going to be persistent enough or unfold differently, say, than it has in other countries, UK or India, and be more challenging to where it starts to affect demand, I've got to take that into account and will adjust my views accordingly. So we've got a month between now and the next FOMC meeting, and it's a good thing we've got a month to see how this all unfolds, because I don't know. And I've got to be open-minded, and I will be.
Okay, so that word again, tapering, is in his speech, and it's causing some fluctuation today in the market. So let's get into what headlines are showing today in regards to mortgage rates. Right here is the normal calendar that we focus on, and it gives us basically the high points and low points or whatever of the things that we're concerned about in the mortgage and real estate world. So if you see here the China rate decision, it should cause no fluctuation today. But then if you really look at what's happening in the MBS market, for those that follow this and know what I'm talking about here, and I'll discuss this in more detail in a minute, this isn't a good number. Okay, so what's going on? If there's no economic news, what's going on? This is where the normal loan officer doesn't dig into things to see what's going on in the markets and why. Well, Fed's Kaplan just spoke earlier today, and that's what we just listened to. And you heard his words. He is expecting them to speak in September about tapering, and then October maybe putting that in place. But the huge variant here, the unknown, we don't know, and it's a moving target. What the Delta variant is. Everything else is in place, but how is the Delta variant affecting the markets? And it's affecting it today. Now, tomorrow and Monday and Tuesday, it might subside or whatever. But this is the concerning part, where what's causing mortgage rates to go up and down pretty sporadically. So let's go into the MBS chart. People follow me on a daily basis to see, Dan, you talk about rates every day in the real estate world. What's going on today and why? Well, this is what's going on. This number right here represents the price of a mortgage-backed security. Mortgage-backed security is the biggest component of your mortgage rate. It's not the Federal Reserve. They don't target or dictate the mortgage rate. They can kind of manipulate it, but they don't do that. The 10-year Treasury, no, any Treasuries. It is this right here. Okay, so what happens is, this is what's going on to the price of the bond. As the price drops or deteriorates, okay, you have a rate increase. So we saw over the last 2 weeks, it's not been very good, but we had a nice little comeback or rally this week. I was hoping that we would stay above this threshold right here and move above this. We didn't, and that is a little concerning because we can drop back down into this range. These are all analytical numbers and charting that I follow. Let me go through it real quick with you. I won't bore you to death. This is what's happening to the mortgage-backed security prices over the last quarter. These lines that go straight across, these are what we call Fibonacci levels. These are ceilings and floors, that are in place that should be technicals on where things should trade. Okay, so right now we're trading in this range right here. Right now, this line here represents the ceiling, run at 101.45. This green line across here, and this represents the floor. Well, we're pretty darn close to the ceiling. If we cannot break that and close above that, we can drop all the way down to here. Okay, that's probably an eighth higher in rate. You might say an eighth doesn't, who cares? Well, if we miss this and then we miss another one and we miss another one, that could be a quarter, 3/8, or more on your mortgage rate. We pride ourselves in timing the markets so we can lock in your rate at the most premium time for you. Okay, so that's the charting that's going on right now. So we haven't closed above this, so that's not good news. We could drop all the way down to 100.8, which again would be a price increase or a pretty decent increase in rates. Okay, so that's what's going on right now. The intraday chart, this is also concerning. It is continuing to drop. There is some green little candlesticks in here, meaning there's buyers stepping in at certain points and buying, but then there's ultimately some selling pressure, which is the red candlesticks keep coming in. We keep hitting them. Okay, so we had complete deterioration all through the day since the chairman, or not the chairman, the Federal Reserve person spoke. Okay, so that's what's going on right now. I'm going to monitor that, but there's really nothing to monitor here. And the biggest reason is, and you even heard in his speech, good thing that the Federal Reserve meeting is already over and they have another 30 days to kind of analyze everything, because the labor market is okay. It's getting better. And that's their number one concern right now. He spoke about inflation, and you can see he don't want to put the word transitory in there, but he thinks things are going to subside. I do too. The biggest curveball that we're getting right now is how hard is that curveball going to be? And that curveball is the Delta variant. Okay, we don't know. So that's one thing that we're going to continue to monitor and monitor and monitor, because if it gets worse, we might see rates come down a little bit. If it gets better, you're going to see tapering fast, and tapering pretty aggressive, and you're going to see a spike in rates. Now, I'm not being a fearmonger. I'm sitting here for you guys watching these rates. So if I see rates continue to get better and better and better, we're going to sit on the sidelines and wait. If I see rates starting to spike, I'm going to lock you in to make sure you don't get a higher rate than anticipated. So that's where we're at right there. There's some weird news today, and I'm glad I'm an owner of a lot of cryptocurrencies. There's going on with mortgage rates today, and that's about it. So the only news out was the one of the Fed people talking. So if you're out there and you're looking to buy a house or build a house, we'd love to consult with you. We do most of these conversations, we do it with a calendar event. We do it through Zoom, so we can sit there and we can actually talk to each other. We can see each other. We can go through some documents. We can share screens and so forth. If you're looking to refinance or cash out, pay off some bills, we'd love to talk with you, do some mortgage analyzers to show you, does it make sense? Can we shorten your term? What payments can you afford and so forth? So we can do that. If you're in a forbearance, we're not getting the calls that I thought we'd get. So if you're in forbearance, I'm going to keep pleading for the next probably 60 days until everybody's out. Please call us. Get an exit strategy. Even if the exit strategy is us saying, you know what, you're in a good spot. Just stick with what you have. So that's it. If you want to learn more about me and my team and how to reach out to us and contact us, all you have to do is go to therateupdate.com. It's right here. There's a whole bunch of tools here and a whole bunch of things down through. Check it out. But the biggest thing is, we'd like you to call. So give us a call at 1-844-775-LOAN, or you can apply right online. But I'd really like to talk with you, or at least answer any questions that you have. You should have questions. So one of the biggest things that's hitting our radar right now is schedule a meeting. Just click here. You're going to specify a time and day and how you want contacted. Do you want by Zoom? Do you want by phone? How do you want it? You pick the day and time, and we'll make sure we are there for you, answering any and all questions that you have. So that's it for today, guys. God bless you. Have a great weekend, and I'll see you back here on Monday. Bye-bye.